Today, good afternoon to everybody. We are in the fifth module, which is the last module of accounting for managers, which speaks about the emerging issues in accounting. And as emerging issues in accounting, today's topic is the human resources accounting, accounting of human resources. Human resources is being considered as an asset of the organization, which contributes a lot to the organization for its development and sustainability. In any organization, the most important input is said to be the human element. The success or failure of a company is very much dependent on the persons who are managing the organization, and they are nothing but the human resources. It is a matter of common knowledge that capital issues of even new undertakings are oversubscribed if they are floated by competent persons. This is because the investor in the capital market places high value on the ratio which are not available in the case of a new company. Even among nations, countries like Japan, West Germany, Korea are able to make rapid strides thanks to the human resources. Not in the terms of numbers, but in the terms of quality, devotion to work, and loyalty to the nation. In the Asiad at New Delhi, it is also established that how two Koreans scored a large number of medals quite out of proportion to their size, strength, and resources. This was possible because of the emphasis on the development of human resources. Japan, a country which is not endowed with much of natural resources, it is handicapped at all thanks to the human resources with the help of which that nation can surmount any difficulty. History is replete with examples of several great personalities like Jesus Christ, Lord Buddha, Prophet Muhammad, Adi Shankaracharya, and Vivekananda to realize the single individuals can achieve without any material resources. In business also, the greatest asset is the human resource of the enterprise and not the plant, equipment, or the magnificent building it owns. It is worth recalling, Alfred Marshall said long, long ago that the most valuable of all capital is that invested in human beings and nothing else. However, it is unfortunate that the balance sheet, which is the which speaks about the face or the index of the business, do not exhibit this most vital asset, while the capital invested in other assets are being shown in the balance sheet. This is one of the severe limitations of the present day financial statements, which hinder the uses of these statements from making full use of them. With the advent of the scientific management, with emphasis on qualitative methodology to make a most efficient use of all resources, attempts have been made in the recent years to quantify data relating to human resources and to develop models to explain its value for the management of the organizations. Before we consider the various aspects of human resources accounting, we may list the principal failures of conventional accounting in relation to human resources. The amount spent on human resources is completely treated as an expense, which is not correct. Here, it may be emphasized that there are two words in financial accounting. One is expense, another is expenditure. If you look to the dictionary, or if you search, or if you go to the literary meaning of the two words expense and expenditure, absolutely there is no difference. But in accounting, they do differ. Not only they do differ, they differ substantially. Expense means any outflow of cash or cash equivalent which neither give rise to the value of any asset or reduction in the amount of any liability. Take the example of payment of electricity bill on or before the due date. Suppose the electricity bill of an organization is coming 50,000 rupees and it is being paid on or before the due date. 50,000 has been paid. When 50,000 is paid on account of electricity bill, will it give rise to the value of any asset of the organization? Absolutely not. Similarly, will it reduce the liability of the organization? Not at all. So, all such type of payments which neither give rise to the value of any asset or reduction in the amount of any liability is termed as expense. But in contrary, expenditure means the amount of outflow of cash or any amount of outflow of cash which resulted into either any increase in the value of asset or reduction in the amount of any liability. Take the example of purchase of a computer. Suppose 35,000 has been paid for buying of a computer. When 35,000 is paid for buying of a computer, there will be definitely outflow of cash to the extent of 35,000. But what happens in the counterpart? In the counterpart, one asset, that means the computer is coming into the organization. That means the value of the asset is going up by 35,000. So that is expenditure. Expenditure are non-recurring in nature and capital in nature, whereas the expenses are revenue in nature and recurring in nature. Take the second example of an expenditure. Suppose a car was purchased and for buying of the car, a loan of rupees 5 lakh was being incurred, and that has to be repaid in 10 equal installments. And the first installment is being paid amounting to rupees 50,000. When 50,000 of repayment of loan is being made, the outflow of cash or bank balance would definitely be there to that extent. And in the counterpart, the liability is being reduced from 5 lakhs to 4 lakhs 50,000 as the amount of loan is being repaid. So that also resulted into, or that also counted as expenditure because it reduces the liability. So any payment which resulted into coming as outflow of cash, but in the counterpart, it either give rise to the value of any asset or reduction in the amount of liability, that would be treated as expenditure. So what happens in case of accounting of human resources? The amount spent on human resources is completely treated as an expense and not as expenditure, because whatever salary, remuneration, emoluments paid to the human resources, to the employees of the organization, as considered as expense only, because it is booked as, it is considered as a nominal expense and booked under the head salary and allowances. So it is completely treated as an expense, which is not correct. The amount spent on acquisition, training and development, which are on long-term basis or which gives a benefit on long-term basis, should be capitalized. Management has absolutely no information regarding total investment in human resources, because whatever amount is being spent, that is booked under nominal expenses under salary and allowances. Third one is, the management needs data about the amount to be spent on acquisition of human resources for purpose of planning and control. In the same way, they need data about other resources. Such information is not available under conventional accounting. So that is another drawback of the conventional accounting as regards human resources. So the failure of conventional accounting to recognize the talents, capabilities and potentials of the human resources resulted in high labor turnover, frustration and despondency among the industrial workforce. The human resource accounting makes up the deficiencies listed above and is based on the following assumptions. The human resources accounting is based on the assumptions like, the first one is, human resources are similar to financial and physical resources in the matter of providing benefit to the organization. The term asset, if you take the example of other assets, it means the terminology of the asset signify a meaning that it is a bundle of future expenses, or it is the fixed assets can be defined in a way that the income from which will be derived in a series of future years. That requirement is very well sufficed by the human resources, but it is not being treated as an asset, which is a common drawback of the things. So the second one is, an asset is defined as the right to receive future economic benefits. In this sense, human resources can appropriately figure as accounting asset, although there are people who oppose this, as these resources cannot be legally owned. Those who follow the inclusion argue that the organization has the operational right to receive the benefit, and one need not invest on the strict legal rights for this purpose. That is true to some extent, but always it doesn't happen so. The third deficiency in respect of human resources are, human resources can be acquired only at a cost. An organization incurs an outlay in the acquisition of such resources because of the expected future economic benefits which are measurable. The next one is, it is theoretically possible to identify and measure human resources cost and benefits within an organization. It is always possible. There is no difficulty in doing that. The next one is, information regarding human resources is useful for internal management in planning, controlling, evaluating, and predicting organizational performance. So these are the advantages of human resources accounting. Then the definition. The American Accounting Association, AAA, has defined HRA, human resources accounting, as the process of identifying and measuring data about human resources and communicating this information to the interested parties. I'm reiterating. The American Association of Accountants has defined HRA as the process of identifying and measuring data about human resources and communicating this information to interested parties. So HRS is intended basically as an information system which reflects the changes in human resources over a time. Such information is vital to management in the planning and control of human resources and budgeting of personnel or the people or the employees who are engaged in the organization. So what is the objective of HRA? The objectives of human resources of accounting are three. The first one is to provide quantitative information on human resources which will help the managers as well as investors in making decisions. Take the example of Ratan Tata, who is heading the Tata Group of organization. He is a personality which is creating an image or a brand for the entire organization. So that information helps a lot to the managers of the organization. It stimulates the managers, the managing force, the management force of the organization is being stimulated by the name itself. The investors are prompted to make more and more investments in Tata Group of organization because of the presence of a personality like this. So it provides the human resources accounting, provide quantitative information on human resources, which will help the managers as well as the investors in making decisions. The second one is to evaluate the return on investment of human resources, how much we are investing on the human resources and what return you are getting from that. That is the objective of human resources, how much the amount to be capitalized on recruitment, training, etc., etc., and what is the benefit we are getting out of our human resources. The third objective of human resources is to communicate the worth of human resources to the organization and the society at large. to communicate the worth of human resources. That means to what extent the human resources are valuable, are valuable to the organization. That means how the organization is growing, how the human resources is contributing towards the growth and sustenance of the organization and to the society as large. When the organization is growing and when the organization is a part of the society, the growth of organization would ultimately lead to the growth of the society at large. So these are the objectives of human resources accounting. Then what are the valuation methods of human resources? There are different valuation methods. In measuring the value of human resources, it is difficult to comply with generally accepted accounting principles. If we look to the generally accepted accounting principles, there are about 10 concepts and 4 conventions. The first concepts of accounting says the business entity or the separate entity concept. The second one is the dual aspect concept. The third one is the money measurement concept. The fourth one is historical cost concept. The fifth one is accounting year concept. Then matching concept, accrual concept, objectivity concept. So there are 10 concepts and there are 4 conventions. The conventions like convention of disclosure, convention of materiality, convention of consistency, then convention of conservatism. These are the 4 conventions and there are 10 concepts basing on which the study of accounting is based. So in measuring the human resources, the generally accepted accounting principles, it does not commensurate or it doesn't cooperate or it doesn't help in making a human resources accounting. For example, when we adopt the economic value approach to measure the human resources, we'll have to sacrifice objectivity. But the economic value approach has increased relevance in this field compared to the historic cost. They are contradicting with each other, the historical cost and the economic value approach. If we look to the historical cost concept, it says that the assets are to be reflected at the value on which the asset was originally purchased or the amount which was actually paid at the time of actual acquisition of the property, and it doesn't have or it has nothing to do with the market value of the organization. So when we adopt the economic value approach to measure, we will have to sacrifice objectivity. But the economic value approach has increased relevance in this field compared to the historic cost. That's very true. Some information is better than no information, and therefore one should not brush aside HRA simply because of the difficulties and imperfections in its measurement. There are 2 approaches to valuation, one based on cost, which takes into account the cost incurred by an enterprise to recruit, hire, train, and develop human resources. In this approach, again, the cost may be historical cost, replacement cost, standard cost, or opportunity cost. Then there are the 4 types of cost basing on which the first approach is made for valuation of human resources. The second approach of valuation of human resources is to measure the economic value of the resource based on capitalization of earnings. It is being treated that the earning of the organization is absolutely ascribable to the skill, to the efficiency of the human resources of the organization. That's why you need to capitalize. For making the valuation of the human resources, we need to capitalize the earnings of the organization, which is entirely ascribable for the human resources. You may be having sophisticated machinery, you may be having a very good infrastructure, but without having a trained executive or without having a trained personnel who can operate the machinery, you cannot manage the show of your organization and absolutely there cannot be any earnings in the hands of the organization. So earnings of the organization are being solely ascribable to the human resources of the organizations who are involved or indulged in operating the business house. That's why capitalization of earning method is the second method for valuation of human resources. Some of these methods are discussed below. The first one is basing on the cost, acquisition cost. Under this method of human resources valuation, human resources accounting, the cost of acquisition, namely the cost incurred in recruitment, hiring, and induction of employees, are taken into account. The process involves capitalization of historic cost. The cost so capitalized has to be written off over a period of time for which the employee remains with the firm. If for some reason the employee leaves the organization permanently, the unamortized cost remaining in the books has to be written off against the profit and the loss account of that particular year of leaving. What happens in course of recruitment, training, and upgrading the quality or grooming of the employees? The organization used to spend huge sum. That is treated as a capital expenditure on account of human resources, and basing on historic cost, that is being capitalized in the hands of the organization, which is being treated as an intangible asset, and that is being amortized, or a part of such capitalized expenditure is being amortized every year, and that amortization continues from year to year till it is fully written off. But if in between the process, before the total capitalized expenditure is being fully written off, if the particular employee on which the amount is being spent has been capitalized, if the organization, if the employee concerned is permanently leaving the organization, then whatever expenses incurred and capitalized for that particular purpose is to be reversed. And how it is to be reversed? It has to be written off in the year in which the employee is leaving the organization permanently, and in that year it has to be written off and it has to be debited to the profit and loss account during that particular year. This method is very simple to understand by all concerned. It is also easy to implement. Other methods of valuing may create behavioral problems, but it doesn't happen in this particular case. Historic cost method doesn't create any such problem. No behavioral problems is there in case of historical cost method. The most important drawback of this system is that historic costs are not relevant for decision making and are useless. The data may be of some use to managers in calculating ROI, return on investment, in human resources planning and controlling expenditures for human resources development activities, etc., but will be of no use to investors because the method doesn't give a correct value of human resources at all. The capitalized figure of human resources under this method merely represents the unamortized balance of the cost and doesn't give any indication of the potential benefits that accrue to the organization from the use of such resources. It is obviously true that whatever amount we are spending on the employees, on the recruitment, on the training, on the grooming aspects of the employees concerned, whatever amount we are actually spending, that we are capitalizing and we are keeping it in the balance sheet in form of an intangible asset, and it is being written off from year to year, and it will continue to exist in the balance sheet in a reduced figure from year to year unless and until it is fully amortized. But as it is rightly said, that the capitalized figure of human resources under this method merely represents the unamortized balance of the cost and doesn't give any indication of the potential benefits that accrue to the organization from the use of such resources. That is absolutely true. Whatever benefit the organization is deriving from that particular person for which the amount has been spent and capitalized, there is no scope for accounting for those benefits anywhere in the financial statements of the organization. So that is a drawback. Then replacement cost. While in use of the acquisition cost, past costs are considered. Under this approach, one takes into account how much it costs to replace a firm's existing resources and thus represents a current value approach. It is what would be the current cost on a replacement of the resources of the organization, of the existing resources of the organization. So this is a method of adjusting historic cost to the current market conditions. This exercise may be redundant unless the management desires to replace its present resources. That's very true. When there is no requirement for replacement of the present resources, then replacement cost will be zero. It is also difficult to exercise, as in many cases the replacement may not be exactly similar. That is also another factor responsible for this. The replacement cost may not be the exact similar figure with that of the replacement cost which is actually needed for the purpose. Replacement cost can be positional or personal. Positional replacement costs are typical in nature and relate to the position but not individual who occupies it. For example, what will be the replacement cost for the position of a stenographer or a cost accountant or a foreman? There are three types of employees or personnel. One say stenographer, another is a cost accountant, another is a foreman, a technical person. For this purpose, one has to take into account the cost of acquisition, development, and separation. The last name refers to cost involved in terminating the services of an employee. That is the replacement cost of the human resources. Personal replacement costs are related to a particular person individually. It is accountable to the employees in their personal capacity. How much it costs to replace a specified person, that matters here. The substitute must be one capable of the same efficiency as the one needing to be replaced. It is very difficult to obtain the replacement cost of an employee which reflects the expertise as well as his sense of belongingness to the firm. It's very difficult to make an identical substitute to replace a particular person. However, supplementary information about replacement cost will be of great use to the management in their decision making. Next one is the standard cost. Standard cost method of evaluation or valuing the human resources. This is an application of standard cost principles to cost associated with recruitment, hiring, training, and development of human resources. The standards set for various components are also helpful to compare the actual and analyze the variations from the standards. Standards has to be compared with that of the actual, and whatever variation that has to be brought to the notice of the management for making a decision about the issue. So this is about the cost method. These three are about the cost method. Second one would be the earnings method, capitalizing of the earnings method. The first one is present value of future earnings method. This model was developed by Lev and Squires and is popular and is very popular in India. Lev and Squires, they have developed this method long back, and the Indians, they are following this method for evaluation of their human resources in different organizations in a rampant manner. This is also known as the capitalization of salary method. Under this method, the future earnings of an employee is graded of or grades of the employees are estimated up to the age of retirement and are discounted at a rate appropriate to the person or the group in order to obtain the present value. The model is expressed in such a manner, the formula is to be inserted, and we can find out that what is the result of the human resources evaluation. Under this method, when the calculation is made under this method, it is made for a group. Values are arrived on the basis of average earnings of each category of employees or each group of employees. Human capital calculated in this manner is useful since comparison with non-human capital will give an idea about the degree of labor insensitiveness. Depending upon the rate of growth in human capital, one can also say whether an organization has an aging labor force or a younger labor force. That can be ascertained as a result of this method. Although the method is simple to understand, but it suffers from the drawbacks. The certain drawbacks it is suffering from. The first one is, it is very difficult to estimate the future earnings, as some of the persons may occupy higher posts than the ones anticipated by acquiring further qualification and skills. This is the first drawback of this method. The second drawback is, since human capital is taken as equal to present value of total earnings, any over or under fixation of salary results in arriving at a wrong value of human capital. Even granting that the salaries have been properly fixed, remuneration paid to an individual may not measure exactly his value to the organization. That's absolutely true. The amount of salary drawn by a person cannot be a yardstick for valuing the individual so far as the benefit the organization is deriving out of that particular employee or the human resource. The third drawback is, the sum of the human capital values of individual employees doesn't add to the human capital value of the organization, and as such, it ignores the synergetic effect. Synergetic effect will be severely ignored in this case under this method of evaluation of human resources. Teamwork is something more than the sum of the values of individuals, which is absolutely true. So with these three drawbacks of the with these three drawbacks of this particular method, in spite of having these three drawbacks, it is a widely acceptable method in our country. Then Horman's unpurchased goodwill model method, which was advocated in the year 1964. This is the earliest model developed in 1964. Horman's was the first to suggest the human resources will come under the category of attritional asset. Although an organization doesn't legally own them, Horman's has developed two valuation methods, both of which are based on the economic concept value. Under the unpurchased goodwill method, as suggested by Horman's, arriving at the value of human resources by capitalizing the profits in excess of the normal earnings of the organization is the base of making the evaluation. Normal earnings are based on the normal rate of return to the economy as a whole. The computation would be done in the following manner. Suppose the average value of owned assets is rupees 3 lakhs, the average value of owned assets of any organization. The actual net profit after 15% is 45,000. The net income at normal rate, say 12%, would be 36,000. At the rate of 12%, it would be 36,000. At the rate of 15%, it would be 45,000. Excess earnings over normal rate is 45,000 minus 36,000, it is 9,000. And while capitalizing the earnings or the excess earnings, which is coming 9,000 here, 9,000 divided by 12 into 100, it is coming 75,000. So this method is also suffering from the demerits. The demerits are, it is based on historic cost and therefore the little value of decision making. It doesn't carry a much importance for decision making. It is not right to assume that the human resources are the only unowned assets and that the excess profit are entirely attributable to human resources. It cannot be an acceptable methodology or acceptable concept for one and all. This method assumes zero value to human resources when the earnings are normal, because the excess earning has only contribute to the worth of the human resources, which is not absolutely a fact. That means in case of normal earning, which is also ascribable due to the support of the human resources, that is not considered here. No emphasis is given for that. Only when there is excess earning, that is attributable to the human resources, which cannot be an acceptable factor. Then Hermanson's second method, the adjusted discounted future wages method. This is basically similar to the leave and squeeze model in discounting the future compensation to determine the value of an individual. However, the value so arrived is adjusted by using an efficiency ratio. The efficiency ratio is found by dividing the actual average earnings of the firm by the normal earnings of all the firms. Actual average earning of the firm for which the human resources are to be evaluated, it has to be divided by the normal earnings of all the firms. The ratio of 1 indicates that the firm's average rate of return is equal to the average rate of return of the economy. If the ratio is more than 1, higher than the normal earnings are indicated. Conversely, when the ratio is less than 1, the firm's earnings are less than the normal earnings of the firms, which is a negative expression. Then economic value method. The next method is called economic value method. The economics concept of the value of an asset is equal to the present worth of its estimated future economic benefits. This approach has a strong theoretical appeal, but this method involves the following steps. The first one is estimation of the future benefit. Second one is ascertaining the present value of such benefits by using an appropriate interest or discounted rate. It is very difficult to estimate the flow of future benefit unless the organization has a single employee. In other cases, where there are large number of employees, it is difficult to identify the benefits flowing from a particular employee. It is just not ascertainable. It is equally difficult to establish the discount factor, although cost of capital suffices for practical purpose. In view of the measurement problem, research is made to use substitute measure such as replacement cost, opportunity cost, expected realizable value, etc. Then the next method is competitive bidding method. This is known as the opportunity cost method. To overcome the deficiencies of replacement cost, Heckman and Jones have suggested the use of opportunity cost. Opportunity cost is defined as the measurable value of benefits that could be obtained by choosing an alternative course of action. In the case of human resources accounting, opportunity cost is determined by a process of competitive bidding in which various divisions bid for the services of various officers. A bid is being taken place for determining the value of different personalities of the organization. The amount of bid is added to capital employed of the successful bidders for determining the return on investment. This method can be applied only to the resources which are scarce, not in other cases it is applicable. There will be no bidding for the types of employees who can be hired readily. Nobody will come forward to participate in the bid process. The system is also not suited to top management, which is not available for action. Then what are the advantages for the human resources accounting in general? These are the advantages. First one, it provides quantitative information about the value of human capital, which is very helpful to managers for taking decisions. For investors also, this is vital information for rating the investments of the organization. The second advantage of human resources accounting is, in the absence of human resources accounting, a management may not realize the negative effects of certain programs aimed at improving profits in the short run. Such programs may result in decreased value of human assets due to fall in the productivity level, high level turnover, low morale, etc. The next advantages of human resource accounting is, as stated at the outset, the success of an organization very much depends on the build-up of quality workforce at all levels. The success stories of Bell, ITC, Hindustan Lever, L&T, and several other enterprises are largely due to the emphasis on human resources development. If this vital asset is not shown in the balance sheet, to the extent the public and the investors are handicapped, human resources accounting helps investors and public by providing the necessary information. The next advantage of human resources accounting is it helps management to judge the adequacy or otherwise of the resources and go in for further recruitment if necessary. Whenever there is any need for further investment, then human resource accounting is helpful for this. The next advantage of human resources accounting is management can also judge as to whether there is adequate return on investment in human resources and determine human vis-a-vis non-human resources like plant and machinery, building, etc., etc. These measures are superior to conventional accounting techniques such as net income, conventional accounting techniques, and ROI on capital employed, etc. That is another advantage. The sixth advantage in case of HRA is HRA recognizes the importance of an individual and thus promotes the intellectual and social growth, thereby facilitating the achievement of economic goals of the organization as well. The next advantage of human resources accounting is management is very much facilitated in its planning and control functions relating to areas like labor turnover, low productivity, performance evaluation, and even capital budgeting. Capital budgeting, there are different techniques on capital budgeting, which are called discounted cash flow method and undiscounted cash flow method, like what is that? Like NPV, IRR, etc., etc., which take the discounted cash flow techniques into account for decision making, investment planning under capital budgeting. Normally, in decisions relating to capital budgeting, only physical and financial inputs are considered, not the human resources. HRA enables the consideration of costs associated with human inputs as well, which need to form part of capital budgeting, which normally doesn't take place. Human resources accounting also helps the management to evaluate management development programs, MDPs. The next advantage of human resources accounting is HRA also helps the management to reorient their attitudes towards labor and improving their leadership styles. So these are the advantages of human resources accounting. Then what are the objections or demerits to the human resources accounting? The first one is, we are not in the days of slave trade so as to acquire ownership of human beings. We cannot say that asset means the organization is the owner of that assets. What the organization owns, that is called the asset. That's why it is objected that we are not, in the days of slavery, the slaves were being owned by the principals. But that doesn't happen in the present days. That's why it is said that we are not in the days of slaves as to acquire ownership of the human beings or the human resources. So it is wrong to show them as assets in the balance sheet. Most of the employees can leave the enterprise at the time of their choice with a couple of months notice. So every employee is free to relinquish their employment, relinquish the organization by serving a 2-month notice to the management. Nobody can restrain their stay in the organization. That's why it is the major drawback of the human resources accounting. There is no objective method of measuring human capital, no concrete proof or concrete proven mechanism for evaluation of the measurement of human capital. However, information based on subjective methods will be of use in a moot point, but it's not a concrete methodology for evaluation. The measurement of human capital bristles with many difficulties and involves considerable expenses. So, the management must decide only after taking into account the utility of information to be collected, not prior to that. The measurement of human capital bristles with many difficulties and involves considerable expenses in that score. So the management must decide only after taking into account the utility of information to be collected. So that is another objective to the human resources. The next one is, one must take care of the behavioral implications of the system because of the reactions of people when quantitative values are attached to them or to the people. So the whole process of assigning values and reporting them be done with tact and discretion. Without that, the human resources accounting would be of no use. It would be a complete failure. So one must take care of the behavioral implications of the system because of the reactions of people when quantitative value are attached to them. The people would be very much reactive because they are all sensitive people. When quantitative values are attached to them, it is quite obvious to get their reactions. They may not accept the process of evaluation so easily. So the whole process of assigning values and reporting them must be done with tact and discretion. It should be done in such a manner that it will not affect their emotion. They may be very much reactive to the issue. As such, we must be very much careful. The organization should be very much careful while assigning any value or either quantitative terms or otherwise for the purpose. Otherwise, they would be very much reactive to the process of evaluation and its accounting process. The next disadvantage of this human resources accounting or the objections are, if the existing compensation system and promotional policies are not properly determined and HRA is based on such structure, it can lead to perpetuation of existing inequities. In case of existing inequities, it will create a disturbance. How? The promotional policy, the existing compensation system, what is the package system to individuals and what is the promotion policies? If it is not properly determined, which is based on such a structure, the structure should be so designed that it should be the compensation package and the promotional policies should be taken into consideration. It should be thoroughly taken into consideration. Otherwise, it will lead to perpetuation of existing inequities. It will create an imbalance. Therefore, Serious attention must be given to review the personal policies before introducing HRA. Personal policies means the HR policies of the organization. What type of HR policy the organization is being following? Since sometime in the past, it has to be thoroughly analyzed. It has the account section must probe into the matter that what type of personal policy, what the organization is implementing, that has to be thoroughly analyzed before implementation of HR accounting in any particular organization. Otherwise, it may create a disequilibrium in that particular organization. So care should be taken for this because it is a very sensitive issue. The next one is for the purpose of external reporting, reasonably good HRA system will be inconsistent with generally accepted accounting principles. As we said, that the generally accepted accounting principles is based on 10 concepts and 4 conventions. Each concept and conventions has got its own principles basing on which the study of accounting and its practice is relied upon. So, for the purpose of external reporting, reasonably good HRA system, human resources accounting system, is to be inconsistent with generally accepted. If there is an inconsistency with the generally accepted accounting principles gap and the HRA system, then there will be obviously there will be an anomaly, equilibrium in the organization. Therefore, it cannot form part of audited financial statements. The human resources accounting cannot form part of audited financial statements. That means only for purpose of reporting, it will be reflected in the financial statements like balance sheet. But for purpose of audited financial statements, the human resources accounting or the reflection of human resources as an assets in the balance sheet of the organization, that is not permissible. That's why it is said, for the purpose of external reporting, reasonably good HRA system will be inconsistent with generally accepted accounting principles. Because the generally accepted accounting, let us take the example of the historical cost concept of accounting. Historical cost concept of accounting says that the assets are to be recorded at the price which is actually paid at the time of original acquisition, and it has nothing to do with the present market value of that particular asset. So in that case, if we take into consideration the accounting of human resources, then the amount which was paid at the time of original recruitment of a particular person and what was the amount spent on the training and development of that particular personnel has to be a part of the human resources accounting so far as the historical cost concept is concerned. But is it enough? Is it a correct reflection of asset in the financial statement of the organization? Because in course of time, when the employee became older and older in that particular organization, his contribution to the organization would be a sky-high figure, and it just cannot be compared with the petty or the small figure which is being reflected under human resources accounting, which was incurred for purpose of its recruitment, training, and development at the time of its recruitment. It would be a very meager figure, and it would be incomparable. Its comparison with the present contribution, with its present contribution to the organization, will be of no use. That's why, therefore, it cannot form part of the audited financial statements. However, there is nothing wrong publishing them as part of an audited report, as it is being done by some undertakings at present. So, what the few organizations are doing in respect of human resources accounting, they are making the proper evaluation of their human resources, either following any of the methods as discussed earlier, and they are putting a figure for the human resources accounting, or for showing the human resources as one of their assets in the asset side of the balance sheet by following any of the method like future earning methods or whatever it may be. But it is being shown simply by way of a reflection which is reflected in the audited financial statement and not forming part of the annual report of the organization. That's why it is a major drawback of the financial accounting, particularly in respect of human resources accounting. It will not form part of the audited accounts, although it will be reflected as a part in the unaudited financial statements. So these are the drawbacks of human resources accounting for any particular organization. Then let us come to the conclusion or summary. There is an increasing demand for accountability regarding the value creation by human resource function. It is obviously true that the human resources contributes a lot to the organization, and without the support of which, without the human resources, the existence, the sustenance of the organization is just not thinkable. We just cannot think about the sustenance of the organization without human resources. It is very true. That's why it is said that the increasing demand for accountability regarding the value creation of human resources function. The management is interested to see a link between HR programs and the company's bottom line profit. The two are to be compared with each other. One is the HR program as well as the profitability of the organization, which is there in the bottom line of the organization. Investing in people and providing appropriate HR interventions, initiatives, and solutions can result in an increased and sustainable bottom line over a medium horizon. This is possible, but a thorough balance must be maintained between the two, the HR intervention, initiatives, and solutions with that of the bottom line over a medium horizon. However, the problem is that there is no direct link between the bottom line and the HR function. The profitability may be more, the profitability may be less, but there is absolutely no direct link of the profitability with that of the HR function. This problem partly arises from the fact of the HR investments are treated as a revenue expenditure rather than on capital expenditure, as we discussed from the very beginning of the session. HR investments are treated as a revenue expenditure, revenue expense rather you can say, because the expenditures are capital in nature and non-recurring in nature. In absence of any direct correlation between HR interventions and bottom line, and in addition to lack of measurement of benefits of HR intervention, it becomes difficult for managers to decide for which program to invest, how much to invest, and whether a particular program adds value or not. Human resources accounting is an attempt to address some of these issues. The basic premise of HRA is that expenses related to the development of human resources are capital expenses. They should be treated as an asset because the gain from human resource development are going to accrue to the organization for a considerable period of time. What is the definition of the fixed asset sales? The asset, fixed asset means the benefit from which will be derived in a series of future years, which definitely occurs or took place in case of human resources. So various techniques have been developed to value human resources in the present age. One set is based on the cost incurred and the other is based on the value calculated by discounting the future earnings of the human resources. So whatever may be the value, whatever may be the resources concerned, but the thing is, its accounting should be done in a proper manner so that there would not be any conflict between the bottom line and the HR department. This is for human resources accounting for today's topic. Thanks to all.